In this video, I'm going to go over the retail sales report. This comes out monthly from the Census Bureau, and it is the first report that we get on consumer spending. It's very important because consumer spending makes up about 70% of all spending in the economy. And this report tells us about 1/3 of consumer spending. Specifically, it focuses on retail and food services. It's broken down by kind of business. What the Census Bureau does is they send out surveys to around 13,000 businesses a month and collect data on spending. You'll notice that we have not adjusted data. This means seasonally adjusted, and then we have adjusted. We want to use the seasonally adjusted data whenever possible. So we'll focus on these columns over here. Okay. It's broken down into the current month, which for this report is January 2019. By the way, the report comes out about 2 weeks after the month. So we would have received this report mid-February of 2019. And then it goes back to the prior month, December 2018, and the month prior to that, November 2018. Okay? And then it goes back 1 year prior. So you could compare month over month, or you could compare year over year. The data is stated in nominal terms. So for example, in retail and food services total for the month of January 2019, there was 504, this is in millions, so we had 6 zeros. So there were 504,440,000,000 in total retail and food service sales for that month. Okay, these are not annualized figures. So this is the monthly amount in dollar terms. And you could compare that to the prior month. So it looks like it's up from the prior month. And you could compare it to the prior year. It looks like it's up from the prior year. Okay. In fact, we could do calculations to determine how much it has changed. If you recall that formula that I gave you previously, where to calculate the growth of anything, we simply take the later period and divide it by the earlier period and then subtract 1. Let's plug in the numbers. Let's compare January 2019 total to January 2018. So we're going to take the latter period, which is 504,440. We're going to divide that by the earlier period, which is 493,177. And then we take that number and subtract 1, and that gives you the decimal percent change. But we could, of course, change that to a whole number by multiplying by 100. And if you do that, you get about 2.3% growth. Now, we'll double check that on the next page because there is a table that actually does growth rates, so 2.3%. So hold on to that number for the moment. Now, because these numbers are nominal, not real, that is, they're not adjusted for inflation, all we know is that the dollars spent went up by 2.3% from this period to this period. It doesn't tell us if the spending went up because people bought more stuff or because the price of that stuff went up. However, there is a technique you can use to adjust these percentage changes for inflation. If we have a 2.3% increase in nominal spending from January 2018 to January 2019, and let's say we look at the consumer price index over that time and we see that it went up by 1%, then we could adjust these numbers by taking the 2.3% and subtracting the 1%, giving us a 1.3% increase in actual real spending. That is, people bought 1.3% more stuff because we've removed the increase in prices from that percent change. All right, so that's a technique you can use. Now, the next thing we're going to do is some exclusions. So if we take this total and we back out motor vehicle and parts spending, we get a smaller figure. We go from 504 to 402. Okay, so we've removed about 20%. We would do that because motor vehicle and part spending is a very volatile component. It fluctuates a lot month to month. So if we want to just analyze spending without that included, we can do so. We could also remove gas stations, which is another volatile component. So we go from 504 down to 464. And part of the volatility that comes with gasoline station is prices. I mean, you know that gas prices can change quite a bit over the course of 4 weeks. As a result, these numbers could fluctuate a lot. So we might want to take gasoline stations out as well. We may want to take all of it out, all stuff related to vehicles, parts, and gas stations. And in that case, we would go from 504 down to 362. So there we've removed a good 30% of our spending, but we'll create a more stable indicator. Okay, let's keep going. If you look at the subcategories here we actually have the numbers for motor vehicles and parts. So this is what you removed. When you went from 504 down to 402, you took this number out. Okay. Next category is furniture and home furnishings. Okay. About $9 billion. $9.7 billion in spending. Electronics and appliance stores, about $8 billion in spending for that month. Building materials, garden and supply dealers, $34 billion. Food and beverages, this is a big one, right? $63 billion spent in the month of January. Okay, and it breaks it down into grocery stores and beer, wine, and liquor stores. So you can see that most of the spending is in grocery stores. No surprise there. Then you continue on. You've got health and personal care stores, $29 billion. And then you've got gasoline stations, $40 billion. So that would have been the number we removed up here, right? If we go from 504 to 464, we excluded gas stations. So we took that number out. Then you have clothing, about $22 billion. Okay. And then sporting goods, hobbies, musical instruments, $6 billion. And then general merchandise, about $60 billion. Okay. Now, some of you may be wondering, well, what about these stars here? Okay. Well, we're looking at, in this report, we're looking at what's called an advance. That's what that A is here. It means advanced report. So it's the first one to come out. This is literally the report that would have come out 2 weeks into February 2019. So they don't have all the information yet. Okay. But if you look at December 2018, notice that a lot of this data is there, because by the time this report comes out in mid-February, we have more information about December. Okay. And we have a lot of information about November. So you have the advanced report, which is going to have the least amount of information. Then you have the preliminary report, which is going to have more information. And then you have the revised report, which is the last report that would come out. So these are the final numbers for November. But we have some changes that may occur to December. It's preliminary. And we have a lot of changes that are going to occur for January. And those changes occur in subsequent reports. All right. Now let's scroll down a little further and take a look at, I want to stay in the January column here. Let's take a look at non-store retailers. You see, you'll notice you've got 57, almost $58 billion being spent not in stores. Well, that could be online. And that's going to be probably the biggest part of this. But it could also include telephone orders, right? You know, you call in to a company and order something through, you know, either a catalog or some kind of advertisement. And it could be door-to-door sales where the store comes to you. But when we say non-store retailers, what we mean is you're not traveling to the store. You're not going to Walmart. You're not going to Home Depot. You're not going to Kohl's to buy the product. You're either going online or maybe they're coming to you. So this is an interesting one because we witness quite a bit of growth in this over time. And you'll find this if you take the percentage of total retail spending on non-store retailers. Let's do this here. Let's take the 57,888 and let's divide that by the total spending, which we established was for January 504,440. So 504,440. Okay. So you've got about 11.5% of all spending on retail and food services in non-store retailers. Now, what's probably surprising is how low that number is, because we kind of think of people buying a lot of stuff online now. But online is still a smaller fraction of spending than traveling to stores, general merchandise stores and miscellaneous store retailers. All right, so keep that in mind. And of course, food and drinking places. That's a big part of traveling to the producer as well. 60 billion, almost $61 billion. Okay, let's go ahead and move to the next page. By the way, just make sure you know how to calculate those percentages too. So if you wanted to know what is the percentage of retail and food services that electronics makes up, you would take 8 billion, 26 million and divide it by 504 billion, 440 million, and you get a percentage. Okay, kind of breaking up the total pie into its different parts. But let's take a look next at Table 2, and this one actually gives you the percentage changes. Well, we calculated at the beginning of this video the percentage change for retail and food services from January 2018 to January 2019. Okay, and it was 2.3%. So even though we could calculate it, it's given to us. We could also look at from the month prior, from December 2018 to January 2019, and that's a 0.2%. And this gives you quite a bit of good information because you can quickly see what areas of spending are moving the most. Notice that 2.3% overall year over year increase in spending, but if you exclude motor vehicle and parts, it's actually 2.8% increase. So you had greater growth in spending when you remove motor vehicles, and then 2.9% if you take the total and remove gas stations. Then breaks it down. You can see motor vehicles and parts, that went up by 0.2%. Furnishings went down by 2.7%. Home furnishing stores. Electronics and appliance stores down 3.3%. And then look at this, 8.7% increase in building material and gardens year over year. Some of that's probably tied to housing prices going up, right? Because if people's homes are increasing in value, they often improve those homes, right? If your equity goes up, you feel like you have more wealth and you're more likely to upgrade your home and spend that money to enhance your home. And then 3.2% for food and beverage stores, 2.8% for health and personal stores. Gas stations down 4.2% in spending. And then it's down sporting goods, down 6.2%. And non-store retailers up 7.3%. Right? So definitely growth in online purchases there. Okay? And then food and services up 5.4%. Okay. So you want to be able to interpret these changes. Could look month over month, but year over year is much more telling because of the longer time frame. Again, keep in mind that these percent changes do not capture the actual real values. It's nominal only. So to say, for example, that gas station, spending went down by 4.2%, it doesn't necessarily mean that people bought less gas. It could just be that gas prices dropped, right? Or it could be a combination of both. Same thing here. You say building materials went up 8.7%. Well, that doesn't mean that people are buying more building materials. It could be that the prices of building materials went up. So they're just spending more dollars here, spending less dollars here, or it could be both. All right, that's it for this report. If you have questions, let me know. Thanks.